Hi everyone, this is Munish, a Web3 blockchain AI enthusiast and due diligence advisor. So today's topic is a bit provocative. It may challenge popular narratives about tokenization and real estate. What if a tokenized property get destroyed in a war? What happened to the tokens? Everyone says that real estate tokenization will make property investment global and liquid. But let's pause and think. Right now, we are already seeing how geopolitics can shake global markets. The ongoing tension between the Iran, Israel, and the USA are creating the instability across the financial markets worldwide. Crypto markets react instantly with the sharp volatility, sudden liquidation, and the massive price swing within hours. Now imagine what could happen to a tokenized real estate asset during such uncertain time. What would happen to the token holders? So let me dive a bit deeper. Let's say you own a tokenized share of an apartment through a platform offering RWA tokenization real estate projects. So instead of buying the whole property, you own a fraction of it through blockchain tokens. Sounds powerful, right? So global investors are participating, ownership is fractional, transactions are digital. But now imagine a geopolitical conflict damaged the property. So your tokens are still on blockchain, but the building is gone. So let's discuss the different situations as a food for thought. So if the property get destroyed in a war, several things may happen. So let's discuss the different situations. So situation one. So let's say property is insured. So most large properties carries insurance. So possible outcomes in these cases, like insurance companies compensate the property owner, fund may be used to rebuild the property or pay investors. In this case, the token holders may receive the insurance-based compensation. But the war-related damage is something excluded from the standard insurance. So let's talk about situation two. So if the property is destroyed and the insurance doesn't cover it, so the asset value drops drastically, rental income stops, market value may approach zero. So result for the token holder is, so let's discuss the different scenarios with factors and what happened. So number of tokens you own remain the same, ownership percentage remain the same, token value drops sharply, and the rental income, it's already stopped. So the token remains, but their economic value collapse. So now let's talk about why the token still exists. Blockchain only records the ownership data. So let's take the example before war scenarios and after destruction war scenarios. So before war, 1 million token exist. After destruction, same number of tokens still exist. Before war, property may worth 10 million USDs. After war, the property may depreciated to 2 million or to 3 million, right? So token price before war may be around $100, and after destruction token price may drop drastically. The token count does not change, but the asset value backing it changes. So now let's compare the real estate tokenization versus traditional ownership. Both faces the same asset risk. So let's take the example for the same. So traditional real estate, you have the paper ownership. In tokenized real estate, you have the blockchain ownership. The physical asset risk is same in both the scenarios. Insurance may apply, so the tokenization does not remove the war risk. So where the tokenization might help slightly? The tokenization could help in liquidity if the investor fear geopolitical risk and they may try to sell token quickly on the marketplace. But this only works if the buyer exists. In crisis situation, liquidity often disappears. So give it a thought. Tokenization changes how ownership is recorded, not the risk of the physical asset. So if the building is destroyed, the tokens still exist, but the value behind them may disappear. So this is exactly the kind of critical thinking many investors miss when they hear phrases like borderless real estate, liquid property market, global mobility of assets. The truth is, real estate will always remain tied to a geography. So here the question I would like to ask you, does tokenization truly reduces real estate risk, or does it simply changes how the ownership is recorded? Curious to hear perspectives from investors, builders, and real estate professionals like you.